Hi, welcome to Forex In Four. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Tuesday, July 19th, 2011. This morning I'm talking about is a Euro solution in sight, and I'm just taking a look here at the Euro on the 30-minute chart. You can see here, came down and we tested the 140 area, all right, and then we got a little bounce and we're starting to move higher. Got up as high as 142 here. Okay, and now we're just sort of sitting around a little bit of a pullback here. So what's been going on in the Eurozone? Well, you've got the leaders getting together and they're trying to come up with a solution for this Greek debt crisis. Okay, we know about the potential contagion in Spain and in Italy, and it looks like they may be getting further. So you had the Greek finance minister came out and he said that the agreement on debt is attainable, meaning that they may agree to the austerity and to all they're doing. And the ECB on their part, they're going to say, okay, well maybe we'll start to accept some of these Greek bonds as collateral, and it looks like that they could be moving closer to a solution. Now, in the meantime, you had the ZEW economic surveys that came out in Germany, and the economic sentiment there was lower than expected. They were expecting a negative 12.5 reading. They got 15.1, which is bad. But overall in the Eurozone, economic sentiment was also lower, but the German ZEW current situation was actually better than expected. So people understand that things are pretty decent there right now, and that it's really just this Euro-Greek debt crisis and the contagion to Spain and potentially Italy that's hanging over their heads. And if they can find a solution to this, then they may be able to get out of the woods. So that's a good thing. We're going to flip over here. Just want to look at dollar versus loonie. All right, this morning we have a lot of risk taking going on. You can see the euro was higher there before. But on the back of this potential resolution, there's also news being floated that perhaps in the U.S. we're closer to a deal on the debt ceiling. There's rumors going around. They had a secret meeting on Sunday, and they may be moving closer to that. So the market's in a little bit of risk-taking mode. Okay, we have gold higher. It's firmly above 1,600. We can actually just look at that right here. I'll show you that one. All right, gold trading above 1,600, nominal all-time high. All right, and we can also look at oil. Okay, oil here is trading up above 97 as well. So you can see here how the correlation works with the dollar and the Canadian dollar. All right, Canadian dollar strengthening a bit here. Okay, and we're just off of these highs here for the Canadian dollar, which we haven't seen in just go back to the weekly, in quite some time. All right, back to it looks like it was back in 2007. Okay, so we're coming down, we're approaching this double bottom here. We'd also been there a little bit earlier, back at the 94 area. All right, now the Bank of Canada is having their interest rate policy meeting today, and they're expected to keep rates steady at 1%. And this is sort of a theme that's been going on around the globe. I'll get to that in a second. But you have all these central bankers who, their individual countries and their economies are getting better, and they want to start raising rates to thwart inflation, to keep from stifling growth. But they have this total global crisis going on between what's going on in the Eurozone, what's going on in the U.S., and that's preventing them from taking domestic action. Okay, so that's a real issue. But right now they're expected to raise rates potentially at the September meeting, and then again at the following meeting after that. So people are expecting that the interest rate in Canada is going to get up to about 1.5% before year end. Obviously, we'll have to see how that goes. We can't jump that. Count that chicken before it hatches, so to speak. But right now, it looks like Bank of Canada is going to leave rates steady, and we'll see if they have anything to say about that. Now, we actually did get a statement here earlier this morning from the RBA in Australia, and this is what I was just alluding to, is that the RBA, while they would love to potentially raise interest rates to thwart off inflation, basically they said, what's going on with the euro debt crisis is preventing them from doing so. So they have some time, all right, and they said that it would be prudent for them to let it play out to see what's happening. So they can deal with, shorter term inflation there, for a chance to see how this euro debt deal plays out. Because, if they were to go ahead and raise interest rates and then Europe defaults, I mean, they could have massive volatility and a massive disruption to to their economy. So it makes more sense to just deal with a little bit of inflation for now, and then hopefully this debt crisis gets solved. So that's kind of what we're looking at here. We've got equities higher across the board. All right, Europe stocks are higher on the on this news coming out of the eurozone that potentially these things are going to get better. Now, there's also some bond auctions going on in Spain and Italy. We'll have to see how those are received by the market. And then later this morning, we're going to get U.S. building permits, U.S. housing starts. We'll see how those are performing. They came in so bad last time that it's the bar's really been lowered with the expectations. So I could see this being a better than expected number, but I could also see it being worse than last month. So you just got to be careful with the nuance there. So that's what we're looking at. So it looks like Aussie's moving higher on risk taking a little bit here, but you can see how sold off on the news of the minutes from the RBA meeting. Just show you the Kiwi here real quick. Okay, Kiwi's back up over 85 cents. Okay, basically broke this high. We called this a bull flag the other day on a chart from last Friday. You can see how it was coming in there. So potentially we're thinking that if things start to get a little bit better here, we could potentially see 87 cents on the Kiwi. And lastly, let's just take a look at the Swiss franc. Okay, Swiss franc versus euro. You can see euro moving higher off the 114 lows. All right, less of a need for safe havens. Risk taking going on in the market, so the Swissy is down, and then probably I would guess the Japanese yen is probably lower as well. All right, you can see flatlining versus USD here. So it's actually dollar doesn't look that great versus it. So don't forget, people are still concerned about potential QE3 happening here. All right, if QE3 happens, you're going to see inflation explode around the globe, and that's really what's going on. Is that for all these central banks who increase their interest rates, all they can do is really slow down their domestic demand by doing that. But really, it's the U.S. Fed driving global inflation, and that's going to be something that the entire world's going to have to deal with for a while if the Fed's not willing to do it themselves. So that's what I'm looking at today. Keep an eye out on this Bank of Canada interest rate decision, and if they have anything to say about what they're doing with rates. But the expectation is for next time, and of course, they always have the ability to hike rates now, which would be a surprise to the market. And then lastly, U.S. housing starts we'll be getting later. So good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.